All right. So SPX 500, going to go ahead and go over all these different trades from TradingView. Did they actually finish their competition? Let's see. TradingView competition. Let's see what actually happened here. They're still processing the final results, which is fine, perfectly fine. So, all in all, if I were to come here and look at the paper trading, it's still here. Here's the competition 254,000. So, start out with 250, well, 250, yeah, 250,000. So, made about 4,700, a little over 4,700. So, I don't, that's a little less than 2%. Not bad. Not bad at all. So that's it for the month. I mean, it's like that's not bad if you think about it. 2% every month, if you're able to do it every single month, it's 24% at the end of the year. That's great returns. And what did we do? Well, I did nothing other than take trades based upon the previous candle. So how many trades did it take? I don't know. This is where we're going to count them up and see exactly what went on. So I'm going to hide this for a second. So that way we can actually just get a count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So 20 different trades. So we have 20 different trades. Let's start there. 20 trades total. Let's see how many won, how many lost. So I had 1 loss, 2 loss, 3, 4, 5, 6, 7, 8, 9, 10 losses. So 10 losses, 10 wins. So there we go. We got 10 losses, 10 wins. That's a 50% win rate right there. And let's bring this back. Okay. So now we can view things. It's like, what, if anything, could have been done differently? Now, we already know that I was going for anything above a 1-to-1 anyway. So it was 1 to 1.5, 1 to 1.3, 1 to whatever just seemed right at the time. We got 1 to 1.8 there, 1 to 1.34. That was a 1.6. That's a 2.72. That one was huge. I have no idea why that one was so big. Who cares? That's the 1-to-1 or 1.1. That's a 2.6. Got a bunch of different trades that were here. That's a 1.33, 1.35, 1.25, 1.1. So all in all, over a 1-to-1. That's generally what the target was. And oh man, that one could have been even better. So, and then yes, let's look at some of the ones that won. And would it have been better to have had a harder target, maybe a 1-to-2? So this one, 1-to-2 would have been fine. 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 What else? One. That one won. 1-to-2 would have been fine. That one. Actually, I think we had to go. I might have actually counted that as a loss because I actually believe that won. Let's put a line here so we can bracket it out. We're going to bracket this one out. And that way we can actually go look on the 60-minute and see, because I believe that one actually won. So it's actually 11 wins, 9 losses. Jump back out to the 4-hour. If we went for 1-to-2s, though, that one wouldn't have won. That was this one right here. Actually, maybe it would have. No. Nope. We'd have to bracket out again. And this is where you got to be on. You have to interrogate the data and actually look at it for what it is. And there we go. So had I gotten to this trade, a 1-to-2, actually it was close to 1-to-2 anyway, that would have won just fine. So, okay. Just about every trade that we're looking at right now looks like a 1-to-2, solid 1-to-2 would have won each and every time. 1 to 2, 1 to 2, 1 to 2, 1 to 2 would have eventually won. These ones wouldn't have been played out, but who cares? 1 to 2 here actually would not have won. Yep, there we go. So we finally have one that would not have won. 1 to 2 there would have worked. 1 to 2 here would have worked. So all but one. So just doing a rough estimate. If we did our rough estimation, it's actually 11 wins, 9 losses. Out of the 11 wins, 10 of them would have went 1 to 2. So that would have been 20R, 9 losses plus the other loss, that'd be 10R. So that'd be 10R loss. So we would be up 10R for just SPX 500. So just looking at the data, what we have right now, it's a really, really small sample size. I completely and totally understand that. Tiny, tiny sample size. But, it gives you something to go on. Using that sample size, we have 20 trades, 50% win rate, and it looks like we still could have come up, even if we just grazed the top of like a 1 to 1.5, just left it alone like that. We would have been profitable. That was the entire month of August. It's not the only way that you can look at in order to capitalize on particular trades. So that's what we have for SPX 500. Would have been a 10R if we went to 1 to 2. That's nice. 5R if we went to 1.5, right? So it's like either way, everything looks solid just from a starting point. So if you are looking for a trading strategy just to get started, like it does not have to be that complicated. So that's SPX 500. I'm going to continue on to the rest of the pairs, and we'll see how those played out. But currently, this is what we got. So I like that. I'm going to keep that, open up a notepad here, and then SPX 500. All right. So continue on from there. We're going to do DE30 now. So we are DE30 euro. All right. How many trades did we take on this one? We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 14 trades total. Wins and losses. What do we got? Let's count losses. 1, 2, 3, 4, 5, 6, 7. So 7 losses. Can I spell losses? There we go. 7 wins. 50% win rate again. Here we are. All right. Could we have gone a 1 to 2 on the winners and been just fine? 1 to 2 would have worked there. That's 1, 2, 3, 4, 5, 6, 7. 1 to 2 would have worked on all 7. So even if we went 1 to 2 on all 7, lost 7, we are up 7R. Okay, cool. It's pretty. I like it. Let's take all these, put this in the notebook over here. We're at 10 minutes of time here. Here we go. Let's just cycle through the rest of them. And now we're at JP225. Let's go look at this guy. All right. How many trades did we take? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Another 14 trades. We have 1, 2 losses, 3 losses, 4 losses, 5, 6, 7, 8, 9. 9 losses. Ooh, that one's not bad, or that one is bad in the the grand scheme of things. So that means we won 5. 5 wins. All right. Now let's look. How many of them would have made 1 to 2s? That would have made 1 to 2. So that's 1. That's 2. Where's another win? That's 3. This made 1 to 2. Where's 1 to 2? That's 4. Now here's where it gets interesting, because yes, this would have made a 1 to 2. Maybe if you count that one, like that is really, really close. I don't know. Maybe if you didn't count that one, maybe that next one would have been just fine. It's like, it's so close that it concerns me, because one of the actual wins is, come on, where are you going to get? There we go. 1 to 2. So it's one of the actual wins comes from within this particular trade. So if you were still in this trade hunting for a 1 to 2, you would have missed the second entry that would have given you the 1 to 2. But in the same vein, you also would have missed the 1, 2, 3, 4 trades that would have made you lose. So if we just do, let's just do hard numbers, just each trade, would they have made it 1 to 2? This one would have made it 1 to 2. This next one would have made it a 1 to 2. So all of them would have made it a 1 to 2. So that means we would have been up 10R minus the 9R. I don't want to do math. I mean, like, and that puts us at 1R profit. These are the sort of things that you got to, when you actually go through and back test, you actually have to make sure that if you're going to change parameters, does changing parameters also change the amount of wins and losses that you would have had you changed those parameters in the process? This is one of those instances where it messes up with our numbers by trying to figure that out. What could we do? We could do a 1 to 1.5 instead. That would more than likely work for all of these. 1 to 1.5 at 9 wins puts you at what, 7.5. So we'd still be down. We'd be down by 1.5 R if my math is correct. So I mean, but we haven't blown an account. So even with what that is, we wouldn't have blown an account. So let's start there, see how this plays out. Regardless of how the numbers play out here, we know holistically, overall, it worked out profitable in the end. Small profit, still a profit nonetheless. We didn't blow the account. So 30 days in, we didn't blow the account. Between the next 30 days and the 30 days after that, 90% of traders lose 90% of their capital in the first 90 days. Who knows? Maybe this is the stance that they're on. Maybe they get really, really good at this point in time, and then they start increasing their risk. Or maybe they start changing it up because they're greedy. They're like, I want to get more. Let me start doing that. Or maybe they start getting fearful. They're like, I don't want to take this trade. I'm going to start taking my profits early, or I'm going to let my runners run. I'm going to start taking my profits early, but I'm going to hold and hope that the ones that go into drawdown will eventually turn back around. So I don't know, mentally what might go on, but when it comes to the numbers, so far we've been pretty good. So let's move on to gold. We are at gold, XAUUSD. Gold, how many did we take? Gold did not have a lot. Okay. Gold did not have a lot. 1, 2, 3, 4, 5, 6, 7. 7 trades. Okay. 7 trades, even smaller sample size than what we started out with before. How many lost? 1, 2, 3, 4. This one's still going. Oh no. So already we're at 4 losses though. So the max we could have is 3 wins. Okay. Of the 3 wins, could they have made a 1-2? That was a 1-2. Cool. This would have been a 1-2. Cool. Would this make it to a 1-2? I don't know. We're still in this one. This one would have to come way up here, which, we look, this is the highest gold has ever been. It is so up there. I have no idea. So gold doesn't really give a lot of insight into what we got. Let's say there's 5 losses, 2 wins. 5 losses, 2 wins. If you did the other 2 wins at a 1-2, that would put us up at 4 to a -5R. We're down 1R. So even after all that, we've only lost 1 unit of risk. Still not blowing an account. Still able to go in there and make some more trades. Still able to make it up. Still able to figure stuff out. Okay, so that's what we got. Silver. XAU, no, it's XAG. XAG, USD. How many trades do we get for silver? All right. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We got 11 trades for silver. What else we got? Okay. Losses. 1, 2, 3, 4, 5, 6, 7, 8. Woo! 8 losses. Can't even spell losses. It hurts so bad I can't even spell losses. 8 losses. Do math. Is that 2 wins? Oh, no, I can't even do math. Look, 3 wins. 3 wins. Okay. Would the wins going for 1-2 have made it? 1-2 here. This is where it messes up with our numbers because the 1-2 would have actually played into the next trade. 1-2 there. 1-2 there's way up there. Cool. 1-2 here would have made it. Okay, so out of the 3, given the funkiness of playing with the numbers, out of the 3, we would have made it. Okay, that gives us 6R. Minus the 8R, we're down -2. Let's say for some reason we only took 2 of them because this one was still in, so we never actually took it. 8 losses, 2 wins at a 1-2. That puts us at 4. Now we're down to 4R, -4R risk. Still not a blown account. Now, could it be very well? I guess it depends on your risk, doesn't it? Yeah, because if you risk 25%, you would be down. You would be done. So, but at a reasonable amount of risk, one that isn't trying to gamble and quickly grow an account, you wouldn't be done. Your account would still be fine. So even with 8 losses, we're still in the clear. So let's move on here. We are at West Texas Oil. West Texas Oil, let's see. Looks like we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. We have 13 trades. We have how many losses? 1, 2, 3, 4, 5, 6. 6 losses. 7 wins. Would the wins have made 1-2s? That's 1. That's 2. 3, 4. Does that bleed into the other one? Nope. 5. Does that bleed into the other one? Nope. 6. 7. 7. Okay. So 7 wins, 14R. minus 6R. What's this at? What, 8R? 8R returns. All right. That looks pretty nice. That's West Texas oil. Now, last but not least, natural gas. This one should have a limited amount as well because this one just took forever right there. Let's see what we got. We have 1, 2, 3, 4, 5, 6, 7. So you have 7 trades. Winners, losers, losers. 1, 2, 3. 3 losers. I say 3 losers. Is this one still going? This one's still going. Oh, man. Okay. Would 1 of 2s have worked on this one? Not that one. So that would have increased our thing. It would have worked on 1, worked on 2, and we'd still be in this one. So out of 3 losses, this would have been a 4th loss. So that would have been 4 losses, 2 wins at a 1 to 2. That would put you at break even, minus the fact we'd still be in a trade right now and have no idea where it's going. Right? Did I do my numbers right? We have 1 win, 2 wins. Oh, that was barely pinned out. Oh, that stinks. 3 wins. We have 3 wins. Yep, and we still have 1 trade that would still be going. So if I did my math right, we'd be roughly break even. Still not a blown account. So I don't know what happens in the next 60 days between traders. I don't know how they might manage to blow in accounts now. We have the max we had was 8 losses. 9 losses was JP225. 9 losses, 7 losses, 8 losses, 6 losses. So there are a lot of losses in there. And for the limited amount of trade, you are looking at almost a 50-50, if not less, win rate. And so psychologically, I can understand where some people may go wrong in being able to stick to something, to be able to not change their risk parameters, to not take dumb trades, to not want to get back what they've lost. All that is part of the process, though. That part of the process is hard. And so my thing is, why make it more complicated by having these strategies that require so much brain power when really you're going to need that brain power to hold back your emotions, to maintain discipline, to maintain patience, to make sure you're not getting into trades you shouldn't be getting into. There's a whole lot more brain power is going to come into that. Why make it hard? Start with something really, really small. If for some reason gravitating to something complex is just you, start small here and learn to work through the emotions of losing, because obviously we're going to take losses. There's no way around it. Even as simple a system as this, we're at a 50% win rate with a lot of them, if not less. You're going to take losses. And so how do you manage those losses? Well, if you can come in and you can shoot for more than 1-to-1, you can easily see that, yeah, even with the losses, I can still make it where I haven't blown an account. I might even be able to find a way to be profitable. Then from there, once you get beyond the idea of I need to win every single trade, because that's unfortunately the part that you're going to struggle with. I need to win every single one. I can't have a loss. No, you're going to lose. And so keeping to something simple that allows you to lose, but also be able to make a small adjustment to possibly even just be break even. That is a huge stepping stone in the right direction to be a break even trader. It's not one we want to hear about. It's not one that anybody really praises you for, but that is a huge step. When you have made it to break even, you are more than halfway beyond the line to profitability. Being break even is a huge milestone. And so get there. The faster you can get there and the more comfortable and confident you can that you can stay there, that's all you need. After that, it's minor tweaks here and there. So like, hopefully this has shown some of that. Like I said, I have the Discord that I talked about it every now and then on some of the videos. if you have something that you're working with and you just want some insight, you want some guidance on what you could be doing better, what you can start, uh, maybe little tweaks here and there to help stay consistent, to stay disciplined. Maybe you need some better help journaling. Maybe you need to know what you're journaling. Whatever it is, if I can answer it, I'll answer it. If it takes a little bit longer, then let's have lunch together. Let's start up a Zoom session at some point in time. You buy me lunch because I like Chick-fil-A. I just had Five Guys, and I would be glad to dig in. It's not hard. It just takes a whole lot of work. Most of that work is on you. So if you're not ready for that, then I would say you probably need to find something else to do. So not to be like the bearer of bad news. This is not the easiest side hustle, side job, whatever you want to call it. It's not at all. There would be far easier things. Go do drop shipping. Go do other referral type things. Go be I don't know, be a realtor. Do something else, because this is not it. This is tough. It really is. Does it eventually become easier? It does. But that initial laying the foundation, laying the groundwork of what you're trying to implement and get started, that is really, really rough. You are breaking brand new ground and most of that is breaking ground about yourself that you thought you knew. You really thought you understood yourself. Nope. The market will humble you. Your ideas and your concepts that you have floating around your head, the market will tell you how stupid they sound, especially if you're holding on to them way too hard. You need to learn what the market's going to tell you to hold on to, and then that's what you gravitate towards. You don't come to the market with your own something and say, no, you need to work toward. That's not the way it works. Sorry. So hopefully that covers all that. Can't go forward with this trade. I even tried to place a trade today with this account, and they're like, nope, competition's over. So can't move forward with this. But I have a feeling that we'd be roughly around the same areas of where we're at right now. Like, we wouldn't have blown an account, and we might have been a little bit in loss. We might have been a little bit in profit, or we might have been at break even, but we wouldn't have blown an account. We would not have lost 90% of our profits, 90% of our capital, by just keeping it simple and just having a very simple, compact, a simple plan to come to the market and execute. And then from there, we can start making tweaks. We played some tweaks earlier about just going for a higher risk to reward. Would I have done better? It could have for a lot of them. For some of them, it wouldn't have. And so, okay, well, where's the middle ground in that? Can there be a middle ground? Could there be better ways to get better entries? Could you start using multi-time frame analysis? Could you actually start using other elements of structure and things of that nature? If you look for particular levels within the market, do you sort of change your entry criteria based upon that? I don't know. This is where you have to come to the market. You have to come in with a simple plan. Just get in here simply, start executing, tracking it, overlooking it, seeing what works, seeing what doesn't, and then trying that again. And this entire thing is nothing but a huge science experiment. We have an idea of what we'd like to happen. Are there any elements of this experiment we can change to make that idea happen? And so come at it as a learning process. If you are here trying to pay next month's rent, too much pressure. If you're here trying to pass a challenge so you have a bunch of money so you can actually quit your day job, too much pressure. You're probably not going to make it. Sure, you may know one or two people who have. They're exceptions to the rule. Guarantee you're probably not the exception to the rule. You probably are the rule. You are probably part of the percentage of people who lose their capital in the first 90 days. If you don't want to be, you don't have to be, but you have to understand where you are. So I wish you guys the best. I look forward to continuing on with whatever I'm going to be doing. Once again, I have biggest loss in my trading career has already happened. I'm going to recover from it, and it'll be just fine. Already recovering. So I'm a recovering loser. So if you want to come join me, I have the Discord. Have not really been doing much on Telegram because everything's Discord and everything's been YouTube. So if you want to, interact in the comments here, by all means. If you want to hop on Discord and have a conversation there, by all means, that works as well. Once again, Telegram's been kind of silent, and it might be that way. Why? Because I don't know. It's just not that important. Getting some of this stuff out to you so you can actually see what it actually looks like on a day to day, not just some guy out there who's made it and has all this fancy stuff. And he's like, yeah, just come on, hop into the markets. I'll show you an algorithm that'll win you 100% every other day. It's like, yeah, okay. Like, I understand. Nope, I'm not even going to get on a rant. Be blessed. I'll talk to you later.